The role of the Central Bank of Nigeria in development of the Nigerian financial sector cannot be overemphasized. The Apex Bank has over the years been committed to its responsibility of managing and controlling the nation's monetary affairs, as well as supervise and coordinates the financial activities in the country. In its quest to ensuring soundness, stability, and promote good corporate governance in the financial sector, the CBN on the 29th of April 2021 sacked the board of First Bank of Nigeria and CBN Holdings following management infractions, including bad credit decisions, significant and non-performing insider loans, and poor corporate governance. According to the CBN, its decision was precipitated by the board's announcement of the retirement of the MD CEO was taken without due consultations with authorities, given the systemic importance of the bank. Now, with the recent decision by the Central Bank of Nigeria to remove the board of First Bank and CBN Holdings and replace them with a newly constituted alternative, the question begging for answers is, what will be the impact of this move on shares and investors' confidence in the bank? Well, to discuss this and provide solutions to some of these questions, I have joining me is a senior economist at SPM Professionals, Mr. Paul Alaje, live from our Abuja studio. Good afternoon to you, Mr. Paul. Thank you very much for your time.
Good afternoon, and thank you so very much for having me.
Yes, before I ask if what the CBN did was right or wrong, first I'm going to say that this is like the real boardroom politics we talk about and we hear of taking too far. That's what I think happening here.
Well, the decision of Central Bank is not completely surprising to us, but quite a number of things that we have noticed. First of all, we would say that we have noticed the kiss of death in decision of, say, the board of First Bank by giving out loans which is insured with loans, and we call it insuring loans with loans. And over time, of course, we know it's like building a house on a bubble that will definitely burst one day. So I think to a large extent, a number of things have been compromised with the bank. First of all is corporate governance, which to me is a big surprise that a bank that's been around for over 120 years, we play this cheap, and it's a lot concerns for us. So apart from that, we're talking of issue of credit, not approving credit using the proper approved window, and also giving beyond some certain measures, which I think is also not proper, it's not professional. We also noticed that Central Bank had measured the issue of providing forbearance to First Bank since 2016 till date. I haven't studied First Bank papers. I can tell you that I'm still looking for such in most of the reports that First Bank have reported. They are not there. So I'm actually wondering if this is not selective in a way, or if this is the proper procedure, because it appears Central Bank has given quite a lot of window to First Bank to see if there will be a comeback. I've also noticed perhaps a tussle between the largest shareholder and second largest shareholder, which of course this is not yet in the public domain. The man perhaps with 10% and the next with 6%. You know, quite a lot of issues, a lot of things that a lot of people are thinking about. Another thing that seems to have fueled this is perhaps the support of the restored MD, that partnership with Flutterwaves, and quite a number of things that people are guessing could be beyond the credit and approval of credit without going through the due process. First Bank has over 31 million customers. We deposit over 4 trillion naira. We all know that if anything happens to First Bank, it will not just be a risk on the bank, it will be a major industry risk.
Customers and 4.2 trillion naira when you talk about deposit base. Now, since 2016, according to the CBN, a regime of forbearance was introduced for helping to recover all of this related loans and all of this. What would you say about monitoring? Because some of these figures did not reflect in the audited reports of the bank, and that would affect the price of the shares. You know, talking about the exchange, it has a ripple effect on all that has to do with the bank. What do you think about monitoring and evaluation of reports from our financial institutions?
Well, this will surprise you, because it's not just First Bank that is that practices that has this sharp practice, if you like, quote and unquote. Study for other financial institutions has also shocked us, where we notice that what is applicable in the real sense and what we see in audited report, they are not the same. So, and perhaps because they want to have they want to present their books in better way, they want people to perceive them as strong, but the reality is not what we have on the stock exchange. The reality is not what we have in the books, you know. So for me, I've looked at the book at least 3 years, and I'm trying to match it up with the presentation of central bank governor. But one thing you can give to Governor Emefiele is that he knows what he's talking about. So, but can we say this matches what we have on ground with First Bank of Nigeria? Of course, the answer is not on the affirmative. The answer is no. So I think central bank, we need to do more to reconsider some of the reports, some of the declaration, some of the audited report of most of our commercial bank, particularly commercial bank, and see if it matches. Because this report I also submitted to central bank, but you know, it's not just to submit reports, it's to verify if what has been submitted agrees with the status of the bank, because this will affect shares. When people see that a bank is no longer strong, it will also reflect in share, it will also reflect in a kind of investment that the bank can attract. But for First Bank, up until the time central bank governor came to make that announcement, everyone, most Nigerians and investors outside Nigeria, believe all was well with the bank until recently.
Indeed, everyone thought that all was well. Not to say that we now, you check it out and see that the healthy operations was up to 2016 financial year. And now you touched on shares, and reports that we have also shows that as of last week, immediately after the announcement, some investors dumped the shares of First Bank. Do you think this will change with this reinstallment and, you know, bringing people back on board and following due process as the central bank has done, at least with the management? That's what I mean.
Well, I'll be surprised if there are no dumping of First Bank shares. We are talking of 618 billion naira. Anywhere in the world is a lot of money. It's far more than $1.5 billion. That's a lot of money anywhere in the world. To put something around it, Burj Khalifa, it's not so far from that figure when it comes to what it spends to build the Burj Khalifa, the tallest building in the world. So that's what is the exposure of First Bank. So when you see that people are dumping, people are not sure, there is a high level of uncertainty. Will this bank survive it? Will it go the way of Sky Bank, which of course changed name? You know, but one thing I also know is that the regulator, talking about Central Bank of Nigeria, we do everything possible to protect all 31 million depositors, customers, I beg your pardon, of the bank, and also over 4 trillion naira deposit that is warehoused with First Bank. And that is why I think the monetary authority, in this case Central Bank of Nigeria, is going all out, not just to change the management of First Bank, but also replace with people he feels that in this window I can quickly protect the image of the bank.
When we talk of breach of corporate governance, bad credit decisions, why would a financial institution, I don't know, generally, why would they want to engage in this? Is it a high and mighty, or what could be the issues that want to actually perpetrate this kind of act? Because it's worrisome. We hear corporate governance when we are at their meetings, how they maintain corporate governance, and now we are seeing breach of that and bad credit decisions. It's worrisome, Mr. Laje.
Well, very disturbing. You recall that most directors in commercial banks, they don't pay interest for some of their loans. and this is in public domain, maybe not all, but most of them, they pay little or no interest. It's not the interest that pepper cell and so on what they pay. Apart from that, report that was revealed in 2019 revealed that 5 top banks in Nigeria have large non-performing loan, not because they have given money to small businesses, because they have invested the money or they are exposed to oil and gas sector. 2020 came with COVID, and this COVID drove down that sector, and a lot of them, we even thought they will have issues, but one way or the other they were able to survive 2020. Now, coming back to the discussion of today, which is First Bank and unprofessional way of approving credit, you recall that the First Bank governor also gave us an insight that there is high level of insider trading. So large proportion of this credit had gone to people who would decide the fate of majority of depositors of money with First Bank. So it's like having the yam and the knife. It will only take the grace of First Bank to protect the interest of majority of the people that have funds either as fixed deposit or that have investment with First Bank or that have deposited money with First Bank so that their interests remain protected. And of course, this is the only way. I believe that in the coming week or 2-3 weeks to come, we will start seeing a rebound in shares of First Bank. But for now, it is normal, it is natural for the shares to go down. And I also need to sound note of warning for those that may want to now jump into the shares. We need to do this with a lot of caution. You need to do this with a lot of advice. You may need to talk to investment advisors so that you not be making a wrong decision.
More worrisome is the fact that our banking sector in Nigeria faces a lot of challenges, exposures, let me use that word, to oil and gas businesses, electricity. We can go on and on and on to businesses where they are yet to recoup some of all of this funding. What would you now say is the state of our financial institutions with all of these challenges that we grapple with?
Well, I can tell you that the status of most of the financial institutions looks okay. We have to believe the report coming from Central Bank of Nigeria. And even though I was disturbed, because if the MD has not been removed and now reinstated, it is possible that over 90% of Nigeria may not have known the situation with First Bank. So as much as we want to talk about the insider trading and the kiss of death that has happened with First Bank, it's also important that most of this information be shared, if not with the entire public, but some decision makers, some traders, so that funds are protected. We don't wait till things, the ship is almost getting wrecked before we make it public and we make it available, make the information available to people. I also understand the position of industry risk. If such information is shared too quickly, it may affect industry. But by and large, I think Central Bank, we need to do more in confirming the reports shared by commercial bank, because when you see the reports that we have on the kind of exposure most of these banks have with the oil and gas sector, I tell you, it will be a lot of worry. Even though we've provided a number of solutions so that most of these funds that are non-performing loan will not go completely into bad debt, and we see the quality of assets of most of the commercial bank. The asset quality for me is very weak, and if you have very weak assets, I can tell you that such bank is not strong in any way. It's not just to give out loan. You see, when bank gives loan, against what? Is it against the security or against the ability to pay back? I think it's against the ability to pay back.
Almost finally, on this topic, I spoke to an analyst, and he was telling me that maybe there needs to be a review of the level of independence of bank boards. That must be really clear where their powers could get to. Maybe there should be limits to that. And he also suggested that there should be a loan recovery framework that should be subjected to stress tests at all times to help our banks. What do you make of these 2 points? Did you get me, Paul? Hello, Mr. Laje. Okay, Mr. Paul, if you can you hear me now? Yeah, Mr. Paul. Well, we're having challenges there trying to reconnect with Mr. Paul, but we are going to talk to Paul. Paul, I was talking about the level of independence of the bank boards generally. Don't you think it must be ascertained? And the number two question was loan recovery mechanism. Some say it should be subjected to tests at all times. Do you think that's the way to go to avoid a recurrence of incidents like this? Wow, Mr. Paul still cannot hear me. Okay, Mr. Laje. Mr. Laje, I was asking you, I said, what do you make of the, in quote, powers of the board members talking about banks? What do you think should be done to ascertain the level of authority they have on the banks? And on the other side, the loan measures that we have, don't you think there needs to be a system that checks the level, stress test to all our loan mechanisms at all times at the banks?
Well, I would like to say that when it comes to the powers of the board, I think the laws, there are regulations guiding that already. And we know that we have more than 10 banks already in Nigeria, and we don't have these kind of issues. Even if we have these issues, they are not in this at this point, at this quantum level that we have with First Bank. So I wouldn't want to now assume that all boards, all bank boards have issues. I would just want to say that for First Bank, even though the information may be relatively late, it's fine that it's coming out. Now, when it comes to loan, this First Bank is not the only one that has been faced with this challenge, insider trading and so on and so forth. There are other banks that it's also in public domain. Some of them even make presentation and boast about the fact that they collected loan without interest because they are board members and so on and so forth. And I'm wondering if that is professional, if central bank allows for such. I think such information should not be in public domain, particularly when it now comes to a point of making of public speaking. I think what should be done is that there should be benchmark against the shares of individuals, particularly when it comes to directors. They should benchmark what they can, what can be collected as loan, you know, against maybe 20%, 30%, or max 50% of the value of the shares that they have at that particular point in time.
All right, it's a good way to live it. We'll keep a tab on this story, and of course we'll have you in anytime, Paul, when we need your views to talk on this very important discussion. I appreciate your time this holiday, you joining us in our Abuja studio. Thank you very much. Kind regards.
Thank you so much for having me.